Ultimately, my goal is for us to be a multi-billion-dollar company within the next 5 years. And I've said this publicly, and I'll say it here again. I'm a big shareholder. A lot of my personal wealth is in this company, and I am not selling a share, and I've never sold a share until we're more than $1 billion company. And even then, it's going to be hard for me because I see the potential of what we can do here.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here at the 2025 Rule Symposium in Boca Raton, and I am here with Jason Jessup, Magna Mining. Jason, thank you for coming on the show.
Yeah, thanks a lot for having me, Steve.
Pleasure is all on this side of the table. Go ahead and give us your elevator pitch, include market cap, cash, and debt.
Sure. So Magna Mining is a copper producing company with a portfolio of permitted projects in the Sudbury Basin of Ontario, Canada. We are about a $365 million market cap company. We have, at the end of Q1, $38 million in the bank, ramping up our first copper mine this year and looking to grow to multiple mines over the coming years.
Okay, and those numbers are in Canadian
dollars.
Okay, 365 market cap, $38 million in the bank, no debt?
We have a $24 million convertible debenture.
Okay.
That we entered into earlier this year.
Okay. And what commodities are you going after?
Copper, nickel, cobalt, platinum, palladium, gold, and silver. So Sudbury is a very polymetallic camp. So we have 7 payable metals, but 70% of our revenues come from copper.
Okay, 70% is copper. And what's the breakdown of the other 6?
So approximately 10% would be nickel, a little bit of cobalt, so 9% nickel, maybe 1% cobalt. And then the other 20% would be platinum, palladium, gold, with most of that being platinum, palladium.
Okay, all right. And if you had to guess on the percentages, platinum, palladium, and gold?
Yeah, call it probably, 8% platinum, 8% palladium, about 4% gold.
Okay, so you 7 out of $10 is going to be in copper.
Yeah.
Okay, all right. And let's see, tell us about your experience, your work history, and why the Sudbury Basin is unique for you.
Yeah, that's great. Great story to tell. So I've been in Sudbury for 25 years. I originally went there to work for a company called Inco, which is a major Canadian mining company that was acquired in 2005 by Vale out of Brazil. But Inco had been mining in Sudbury for 100 years. I worked for them for about 5 years. In 2002, a junior company, first junior company to ever really get into Sudbury, it's called FNX Mining, acquired 5 past producing mines, and they were able to bring in 2003 their first mine into production, McCreedy West Mine. I left Inco in 2005, went to work for FNX. We were able to bring 2 more mines into production by 2010, and we were acquired for $1.5 billion. I stuck around for the next year as Quadra FNX, and then Quadra FNX 2012 was acquired by KGHM out of Poland. By 2016, I recognized there was an opportunity in Sudbury again, that these non-core assets that Inco had held and an FNX created so much value in were now back in the hands of a major copper producer and were now non-core to them. So that's when I founded Magna in 2016. We've acquired a number of non-core assets in the basin, and just this year, 4 months ago, we were able to close an acquisition with KGHM for 8 properties, including the producing McCreedy West Mine, the Levac and Podolsky Mine, and 5 exploration properties.
Okay, so you've done this 3 times before, is that correct?
Twice.
Twice, okay. Twice, both with FNX.
Well, with FNX is when, we were first acquired. We grew the company, and then we were acquired again. I left right around that time. But I see the potential in these assets, and perhaps they don't fit with a major company. They wouldn't view them as a core asset, but I understand the value that can be unlocked within a entrepreneurial junior company in the Sudbury Basin. And we're going to continue to execute on that strategy to grow production, to make discoveries and other accretive acquisitions in the Sudbury Basin.
Okay, I got to give you a shout out. You came into the Rule classroom under, we'll call it a pilot program. Rick called it Do Your Diligence.
Yeah.
And he basically said, you come on the show, I'll run you through the ringer, and I'll give you a list of questions. and you'll answer them how you will, and then I'll throw you to the wolves. And the classroom will ask you a bunch of questions. It was about maybe 2.5 hours, and you'll either sink or swim, and
Yeah.
it'll make or break you. And you did it,
Yeah,
and you swam.
It was good.
It was good. So congrats on having the stones to do that. I don't know that a lot of companies would have, but you took the opportunity and you swam with it. Um, Give us an outline of the Sudbury Basin. So, geologically, how is it significant? Kind of, we don't have a diagram here, but try to paint a picture for everyone so that they understand what it is that it looks like, how you're looking for it, and how you've taken your expertise in that area and you turned it into Magna Mining.
So Sudbury is a pretty unique geological environment. One of the more unique environments in the world, I would say. It was created by a huge meteorite impact about 1.85 billion years ago. This huge meteorite impact, it actually cracked the mantle, and metal-rich fluids flowed into this basin, settled out, and that's the copper nickel PGM deposits that have been mined for over 100 years now. Inco was one of the first companies. It really was the first company to recognize this potential, take up a bunch of the land. 20 years later, Falconbridge came in, and these two companies controlled all the mining in Sudbury up until FNX Mining came in, and then they were acquired by Vale and now Glencore. So those are the two major mining companies there. So there's three styles of mineralization. There's the contact nickel copper mineralization, which I would say made up the bulk of historic production, and we're talking hundreds of millions of tons of production. And then there's the offset dike. So you can imagine if your windshield was struck by a rock, you'd have this round fracture, and then you'd have these radial cracks going out. Well, the Sudbury Basin also has those radial cracks. And there are a number of deposits that formed as metals and fluids flowed out into these cracks and formed deposits. And then the third style of mineralization, and this is the one that we've really picked up on and is relatively new in the Sudbury history, only really mined for the last 35 years or so, and those are called footwall deposits. And so when the impact happened, it cracked the ground beneath and around this as well and created a rock type called a Sudbury breccia. It was just a shattered up host rock, but it allowed these cracks and fissures and crevices where these fluids could travel. And copper, naturally, by their geochemistry properties, can migrate further into the footwall, concentrate more, and the PGMs tend to flow with them. And so about 40 years ago, it was recognized these, further into the footwall, deeper into the contact, sometimes as much as a kilometer further, you can find these super rich copper deposits. And that's what FNX really focused on back 25, 30 years ago. And that is what we're focusing on right now. And yeah, that's why we're mining so much copper, and it's a great opportunity to discover more of it. So we're drilling to find more of these high-grade copper deposits, and just this week we put out a number of drill holes that had multiple intersections at 25% copper, plus PGMs and a bit of nickel.
25% copper?
25% copper. Like when I say 25% copper, most people that know mining would say that's called concentrate. You send that right to the smelter.
Yeah.
No, this is in the veins, in the ore, in these deposits. And it's remarkable. And now you look like you're surprised by that. And I don't blame it, because like Vale and Glencore and Inco and Falconbridge, they never talked about this. They just mined it and made money for a number of years. It was really only until FNX came around that they started talking about drill intersections. But that was, 2010 they were acquired. And so there really hasn't been the market education on the super high grades you can get until Magna now. And so it's really exciting to be telling this story.
Yeah. Now, okay, so you have contact, offset, and footwall, and you guys are focusing on footwall?
We're focused on footwall.
Okay. And 25% copper. Now, go ahead and maybe do a little geology 101 on what average grade is and like that, so then if someone doesn't understand.
Yeah, so like globally, the average grade of copper mined is well below 1% copper. And typically those are massive deposits, could be 1 billion tons or more of sort of porphyry style, and you would mine it at very high production rates. Now this is a little bit different. These veins can range from very narrow, as narrow as a foot perhaps, but still being economic, to maybe 10 meters wide.
Okay.
So they will pinch and swell, and they will have big jewelry boxes, and then they'll have these veins going out. So at FNX, we discovered a couple of these types of deposits and mined them very successfully and made a lot of money doing it. And we use multiple mining methods. And typically at the Levack mine, for example, where we release these drill results, One of the Footwall deposits there, when I was running the operations at that mine, we would produce 10% copper quarter after quarter with 8 to 10 grams of precious metals and maybe 1 or 2% nickel. And that would be our typical grade that we would sell to the mill. And that is our business model, selling ore to Vale and Glencore's mills. So we don't have to manage mills. We don't have to manage tailings facilities. We don't have to invest more capital when we want to ramp up production. We just let them know, next quarter we'll be sending you more tons, and this is what the grade is, and then they buy it off us.
Okay. So you're not in the business of milling this and having a wash plant and all that, or any
None
heat
of that.
bleaching, any of that. You
No.
throw it on the truck and you deliver it and you get paid by
It's
the
a
load.
very simple business model that's worked very well.
That's why your mine plan was so simple.
Absolutely.
Okay, that makes sense. Now, with the footwall, you're basically drilling into the side of a mountain. Is that correct?
Well, it's not really a mountain, but
Okay.
there's deposits, and Sudbury isn't a mountainous region by any means, but there's sort of a rim, if you can imagine,
Yeah,
a crater
like a bowl.
that had been, now it's been compressed over the last 1.8 billion years,
Yeah.
so it's more of an oval. But yeah, along the edge of that, you drill through the contact, or you hit the contact nickel and keep drilling.
Yeah.
And you can drill from both sides. But yeah, it's it's relatively easy, and the great thing about it is a lot of the drilling we can do from underground, because we have access to underground at McCreedy West Mine where we're producing, as well as Levack Mine, which is on care and maintenance, but the shaft still runs. People go underground regularly, and we can drill from underground as well.
Okay, all right. Experience that relates to the task at hand. That's a good one. 25 years in that area. Insider ownership. So tell us about the makeup of the company. Any vested partners?
Yeah, so we have about 8% management and board that own the company. So I'm the largest part of that. I own about 5% of the company.
Okay.
So I'm very much vested. We have one significant shareholder who owns about just over 21%, and that's Dundee Corp.
Oh, okay.
Jonathan Goodman sits on our board as well. They've been extremely supportive and a great partner to have over the last 4 years since we went public, and they've invested in every round. And I can't say enough good things about them as being a supportive partner, and they really understand Sudbury and had made a lot of money previously with FNX mining, so they understand what we're trying to do here. Then I would say we have a couple large brokers who own pretty significant positions, probably accounting between 3 of them somewhere in the range of 18 to 20%. And then a number of retail investors, and probably well over 40% in institutions. And that number seems to be growing in our last couple of financings.
Okay, so about what does that leave for retail?
I would say, including those brokers who are investing for their clients, there's somewhere in the range of 30% of retail.
Okay, all right. $3 out of $10 can go to retail. What's the size of the prize? What do we? Where are you as far as an estimate? Proven, probable, measured, indicated.
So right now, we're working on putting out our reserves for the McCreedy West Mine. We currently have in total between McCreedy West, Crane Hill, and our Shakespeare mine 48 million tons of NI 43-101 resource. I think that's running right now about 2.6% copper equivalent. If you look at just our Crane Hill and McCreedy West mines, those are underground mines and have about 27 million tons of that at about 3.6% copper equivalent. We will be coming out, as I said, with reserves around the end of the year for the McCreedy West mine. But the size of the prize, really what we see here, is not a lot different than FNX, in that we think that we can get multiple mines into production over the next 3 years. A lot of that can be bootstrapped from cash flow from McCreedy West. Again, much like my experience with FNX, that's what we did. And then I think there's that opportunity for new discoveries of high-grade deposits, which also can be worked into the mine plan. And ultimately, my goal is for us to be a multi-billion-dollar company within the next 5 years. And I've said this publicly, and I'll say it here again. I'm a big shareholder. A lot of my personal wealth is in this company, and I am not selling a share, and I've never sold a share until we're more than $1 billion company. And even then, it's going to be hard for me because I see the potential of what we can do here.
Okay, so 48 million tons, 2.6% copper equivalent, 27 million tons, 3.6.
Within that.
Okay,
48.
within that. Oh, okay, I understand. Okay, so that's half of the
Yeah,
that. Okay, and so far you haven't sold a share. You own 1 out of 20 shares in the company, 5%.
yeah,
That's impressive. So you have a vested interest along with shareholders of this performing
I
well.
do.
Um, Catalysts. You mentioned at the end of the year you have what coming out?
Our reserves.
Your
So
reserves
put
coming.
reserves out for the McCreedy West Mine.
Okay.
So, yeah, and I think some of the catalysts will be coming out. Watch for drill results.
Okay.
Actively drilling right now, and we try to get drill results every month. So keep watching for that. We are drilling for discovery, and we know how significant these discoveries can mean to a company like ours. Um, we're also looking to put out guidance in the coming weeks and for the rest of this year, which has been, I think, anticipated by the market. So watch for that. As well, there's a number of other things that I kind of get back to our 3 pillars of growth: production, exploration, and synergistic acquisitions. So one thing we've done, I think, repeatedly for those who have followed our story over the last 4 or 5 years, is we put out, I think, exciting positive news that surprises the market. So we're working on a number of things in Sudbury, whether it's with our partners, Valley and Glencore in Sudbury, whether it's with others. So yeah, just watch, and we're hitting our mark. We're doing what we said we were going to do, and I'm very, very bullish on copper. I'm very bullish on what our plan is, and I think this year is going to be a huge pivotal year for our company, and 2026 will be better.
Okay. Those are some of the potential catalysts. Watch for drill results. Look for guidance in the next few weeks. What about some pitfalls? What could go wrong?
One of the with 70% of our revenues coming from copper, we are very much tied to the price of copper. So rising copper price is going to be very good for us. Falling copper price is going to make life a lot harder. So that's one of the risks. Other than that, we have the cash in the bank we need to do what we need to do at McCreedy West. We have the team in place. We have our permits in place. We're not reliant on third parties to meet gut timelines for us. So, I think the biggest thing I look at is where's the metal prices going. Um, I'm still very bullish on copper. I think we got strong fundamentals for the metal, but that is something we watch really closely and try to plan for, and it's based upon what our future revenues will be and how we're going to use those. So copper is the big one, but I think when you look at junior mining, we're in a very risky business, and you have to be able to accept risk. But I think we've built a company that's one of the most de-risked junior companies out there, in that we've done this before. We're in a great jurisdiction. There's great community support. We have our permits in place. We have the cash in place. We have great shareholders. We have a great team. We have a high-grade resource and a commodity, I think, that's got a strong future. It's limited risk compared to a lot of companies.
Okay. What's the biggest unanswered question right now facing your company?
The thing we get asked a lot is we have, McCreedy West and then 4 fully permitted properties: Levack, Podolsky, Crane Hill, and Shakespeare. Biggest question we get asked is, when are these other mines coming online? How are you going to pay for them? Our base case plan right now is 2026 to commence the restart of Levack mine. Then we look towards 2027 sometime at a potential restart at Crane Hill, and then the Podolsky mine in 2028. That's our base case plan, primarily, maybe not 100%, but primarily using revenues and cash flow from the McCreedy West mine. One of the things that could be an opportunity to expedite that and compress that timeline would be lower cost of capital coming in. And we did announce back about a month ago that the provincial government has issued a letter recognizing Magna as one of the strategic critical mineral companies in Ontario, and urging the federal government to invest alongside them to move our projects ahead.
Oh.
So, potentially that could happen over the coming months, which could speed things up, but we never count on that. We are building a plan to bootstrap and move things ahead ourselves, and that's our base case plan, but there's always that opportunity that we could speed things up.
Okay, that's interesting. Okay, so as you see it now, Levack 2026, Crean Hill 2027, and Podolsky, am I pronouncing that right?
Yes.
2028.
Yeah, that would be kind of our base case plan. Could shift by a few months either way, but yeah, that's our base case.
Okay, that's the ballpark calendar. Okay, anything I should have asked that I didn't? Any closing thoughts?
No, I think we had a pretty good overview. Yeah, you touched on a lot of great topics, so it's a good interview.
Okay, thank you,
All
sir.
right.
If viewers want to get a hold of you and follow Magna Mining, how can they do so?
Yeah, easiest way to do it is to go to our website, magnamining.com. Go to our investor center, and there's a contact which has a phone number and email address, and that's the best way to get a hold of us.
Okay, Jason,
All right.
thank you for coming on the show. I appreciate
Thank
it.
you very much. It was great.
You're welcome. And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.